Hey everybody, hey traders, Chris Pulver here. Happy Friday. Welcome back to the Pulver Report. This is a video version of the Pulver Report. We weren't live this morning on YouTube. I was just feeling under the weather. Still am, but figured a video would be easier than doing 4 hours of live instruction today. So let's get at it. This will be for Flex students. I'll post this on my YouTube channel, as well as Equities on Demand and Master Flex. So we're going to cover a little bit of everything today. So let's go. Risk disclaimer, we understand it's risk in trading. Please don't always use trade capital only. You know the deal. If you're following me on social media, two of the best outlets, youtube.com/Chris Pulver, Mondays and Fridays for the Pulver Report. We're live at 9:30 a.m. Eastern Time. And then Twitter, the handle and verified handle is at Real Chris Pulver. Let's get into the charts today. So the SPY is up. We still have this kind of melt up before the Fed next Wednesday. We're trading at 405 and change right now. We had highs today around 407. The Qs are trading right at the 200 daily moving average around 295. I am actively looking to take some bear call spreads. So for my equities on demand students, we're looking at some bear call spreads on the SPY, bear call spreads on the Qs. We did get filled on one of them. The 400 by 405 bear call spread was filled this week for $3.15. We have another one that's pending, the 405 by 410. That's staggered out into June. That's for $3.15 as well. That has not been filled. The Qs, we're looking for it to go a little bit higher towards the yearly pivot, maybe get just a smidge through that 200 daily moving average. The 305 by 310, that's a bull put spread to hedge. Then we have our 306 by 310 bear call spread, 300 by 305 bear call spread. Those are still open. So I want those to be pending, good till canceled, and we'll see if those get filled next week. We also have some pending credit spreads on Carnival Cruise Lines. I did have an assignment this morning on UUP. That is a option play on the dollar. Broker assigned it at 28.50, so I went ahead and closed out the long put and managed the shares to close them down for about a 50-cent loss or like 49-cent loss. That was assigned on Schwab, it was assigned on Interactive Brokers, and it was assigned on TD Ameritrade. So I cleaned up the UUP, just took the small 50-cent loss, moved on. I also added some new trades this morning with Under Armour. It's a retail play. You know, we had some good success on American Eagle Outfitters with the ticker AEO. I had a few staggered credit spreads for profit, so I'm throwing in Under Armour. I like the legs here. The price is currently trading around $10 and change. I'm going a little bit in the money with a bull put spread, the 12.50. So I'm selling the 12.50 put. I'm buying the $10 put. Expirations out to March, out to April, and out to July 21st. I like those trades. So that's new. Looking to see if we get filled on the Qs and the SPY for a little action there. If I look at the Qs, so this was that yearly pivot sitting around 308. If we hit that yearly pivot, that should fill us at the 300 by 305, the 305 by 310 on the Qs, on the SPY. We're already trading, at the yearly pivot. We have this little CPI high around 410. So I'm looking for this to be a little directional hedge against the market. I think that the Fed language will still be tough. I don't know why they come out swinging in February with a expected rate hike, and all of a sudden, get the market all excited about pausing or get the market excited about cutting rates later this year. I think the Fed is still going to want to be very restrictive on their language. So this, to me, as what I'm looking for, is a little rejection off this 410 handle. We've been basically stuck between 410 and 380 on the SPY, and we can stay there. We can stay there. It's very realistic. But if we break above 410, we're going to love that portfolio move. If we break below 380 or 375, we will be correct on the way that we're playing this bear call side of things and why we are so option heavy with our portfolio. So again, a lot of that's just an update for equities on demand. Let's get into Flex right now, talk about some currencies. Wouldn't you know it, the Japanese yen was weak yesterday and it's strong today. So we keep seeing this flip flop of strength versus weakness on the Japanese yen. Volatility wise, things are pretty quiet on this side of things with the vertical axis at 50 down to 35. I was looking at for Master Flex students, we talked about this last Friday, and I was also sharing this week in the Flex Trading Room. If I was looking at a filter around 40 to the strength side and 40 to the downside, we really wouldn't have a trade until way over here. It would have been late in the day Friday, maybe a 40 by. Actually, it doesn't look like it would have filled at all if I had that filter. So this looks like it'll have been a no trade day if I'm looking at my Master Flex kind of update where I'm trying to do a daily trading range filter plus a currency strength filter plus a dashboard filter. And again, we can toggle that because not every currency pair has to be moving 100 plus pips a day. But anyway, this is something I'm tracking and I'm still trying to work on in the background to see if I can get a nice little update out for some active trading in Master Flex. But overall, pretty quiet in Forex. I'm still looking at the same directions and positions we talked about this week. So Aussie Swiss, I'm still long, and it's looking better. We're up against the 200 daily moving average. We're up above the 200 EMA. We're up above the yearly pivot, and I'm curious to see if this is a move, whether we have low to high, high or low to high or high. If we pull back again and have another push into this area, I would take some profit around this supply zone around 67.50. So if we continue up higher, maybe get some positive swap in the Aussie Swiss, I think it looks pretty good to the upside. Also, China's strength and China's reopening is helping commodities and helping the Aussie stay strong. Other currency pairs, Aussie New Zealand, I'm still watching closely, but I wasn't willing to pull the trigger on it this week. Euro Aussie, we took a small buy trade around 52.79. That's in and that's still in. Pound Aussie, we were selling the break and we're going to the downside. So this is kind of a hedge against a Euro Aussie. If the Euro Aussie bounces, if Euro Aussie bounces, then we're looking to make some money on that one. But if the Aussie stays stronger, we're going to take the pound Aussie short. So the goal is we have a stop loss on both these trades. So if we lose on one but win on the other, we're going to make sure that we can ride our winner bigger. And so if the pound Aussie continues to slide a little bit lower towards this pocket area, possibly towards this pocket area, we have some room to the downside for another maybe 300 pips or so. So I like pound Aussie to the downside. We're taking a stab at that Euro Aussie to the upside. EuroCAD, we shorted at the top around 46. That's a great trade, actually. We had 46, 48, and 1.50. Obviously, 48 and 50 didn't get filled, but 4,600 did. And we're up about 150 pips right now. Couple spots for profit. This level, if we work our way back down to the same low, that's around 4,300. That's a safe target one. If we want to wait for a little bit of a topping pattern and a push back down to the yearly pivot, that's around 1.40. So I am short on EuroCAD. I like that trade at the downside. Euro Swiss, the saga continues. We're not making new highs. We're not making new lows. I want to see if we can break above 1.01, continue to trade this higher towards 103.50 and beyond. I will be watching the price action very closely. We could be seeing a channel play out here, something like this. So if it, is choppy and messy and noisy, look to see if we can break above 101. It might pull back here. If that is the behavior, I told traders this week, if this is how I see the price playing out where it's really messy, but we still stay in this channel, by the time we hit this yellow box, I'm going to go ahead and take profit. If we have this thing, bursting to the upside above 101 and then pulling back and bursting again, I might be willing to hang on to that trade towards 105. So yellow box is profit target 1, 105 is profit target 2. I'm looking forward to this trade paying us in a big way. So it will be worth, I don't know, probably 2 or 3,000 pips for me. So that's Euro Swiss. Euro dollar, we're trading at 108.60. We're going to look to see if this one starts to roll over and confirm. If we look at our Masterflex workspace here, let me go to Euro dollar. It's not ready yet, but if we start to confirm some red, basically we just need to see some red trend finder and get below our dynamic ribbons. I think this is a decent looking sell trade going into next week, especially if the Fed is strong, where it starts to push the stock market lower. We're probably going to see a pop in the dollar. And that would also be possibly dollar Swiss. Oops, I typed that wrong. Dollar Swiss on the daily time frame. Still pretty sloppy, but I like the trade overall to the long side. I'm going to hold for some positive swap. I will buy more at 99,000. I'll buy more at 88.50 or 8800. And I'm looking to see the dollar Swiss come back up into this pocket zone. Right in here, nice little pivot play. We have a yearly pivot as well. So even if this is slow to the downside, I'm just going to wait for some structure and then pop back up and try to be aggressive on a bullish trade. So I'll just be patient on dollar Swiss for right now, collecting some rollover. But yearly pivot sits around 9,500. The start of this downward move starts around 9,600. We have a monthly pivot in a big old pocket around 97. So if it comes low enough at 9,000, great. 9,000 to 97 is a great profit target. So I'll stick with that one. Dollar Sing, that's SGD. Very oversold and possibly going to get filled around 1.30. If that's the case, great. This is the left side of the trend line versus the right side of the trend line. I'm just going to be patient. I just have 3 small trades in. 1, 2. This is 3 that hasn't been filled yet, but if it is, great. My break even will sit around 1.3150. From there, I'll just wait. Once we get on the right-hand side of the trend line, I'll look to add a few positions. My goal for this one is to take it back to this midpoint and this pivot around 3750 or 3800. That's dollar Singapore. Anything else? Pound CAD, any trade here? No. New Zealand CAD, we're looking for a high to sell. Not yet. New Zealand Swiss looking for an inverse head and shoulders. It's getting close, but you can see the neckline is still noisy. This is our neckline. If price breaks above here, let's see if we can get a nice little push. If we have a noisy neckline, we have resistance. We have resistance. It may pull back again and set up something like so. Maybe this right shoulder. And if we get another burst of that neckline, let's make sure we're looking to get bullish through that neckline. That's New Zealand Swiss. All right, so that's pretty much the directional plays for this week that we discussed. We'll review this all next week in the YouTube channel on Monday, and as well as Flex all week next week. Master Flex students, we shared workspaces all week. I will continue to dissect some of the currency strength chart and filters for an update so we can address that next week in class. And sorry I was feeling under the weather today. Just want to get a video out to everybody and say happy Friday. And I'll hopefully be back in action on Monday with no issues. So get some rest this weekend, all good. And have a great weekend. I'll see you soon. Thanks. Happy trading, lots of profits. Bye.